Stock. Represent ownership in a company. Each unit of a stock is called a share. If you own 50% of YouTube stock, you own half of YouTube. Shareholder. Someone who owns a stock. Stock exchange. Place where investors can buy or sell stocks. Public company. Company whose ownership is organized via shares of stock that are intended to be freely traded on a stock exchange. Bull market, bear market. A bull market means that prices are rising. A bear market means that prices are falling. They are named after each animal's attack style. Volatility. How fast the stock price moves up and down. Volume. Number of shares of a company traded each day. Capital. Broad term that can describe anything that gives value to its owners. It usually refers to money, but it can also describe machinery, patents, etc. Liquidity. How easily you can get into and out of a stock. It increases with volume. Bubble. Bubbles occur when prices for a particular item rise far above the item's real value due to too much optimism. Sooner or later, the high prices become unsustainable and they fall dramatically until the item is valued at or even below its true worth. IPO. Initial price offering happens when a private company becomes publicly traded in order to raise money. Dividends. Portion of a company's earnings that is paid to people who own the stock. Not every company pays dividends. Blue chip stocks. Stock that comes from a well-known established company. They have a strong history of performance and often pay dividends. Forex. Foreign exchange involves trading different currencies.